Welcome to your daily stock market summary from MarketSnap. Hey everyone, it's time to dive into the latest action on Wall Street. We've got a lot to unpack today with some serious turbulence in the markets, driven by geopolitical tensions and economic data. So let's break it down for you long-term investors while keeping an eye on the short and medium-term waves that could shape your strategy. Buckle up because it's been a wild ride. First up, let's talk about the major indexes. It was a rough day across the board as fears of an oil shock and conflict in Iran weighed heavily on investor sentiment. The Dow Jones took a significant hit, dropping over 1,000 points at one point, reflecting a broad sell-off. The S&P 500 and Nasdaq weren't spared either, both closing in the red with notable declines, though Nasdaq showed a bit more resilience with just a slight dip. The Russell 2000 also felt the pressure, sliding nearly 2%. And let's not ignore the VIX, the fear gauge, which spiked over 12%, signaling heightened volatility. For long-term players, this kind of market reaction to geopolitical events often creates noise rather than a fundamental shift, but it's a reminder to stay vigilant. Zooming out to the bigger picture, the conflict in Iran is dominating headlines and rattling markets. Oil prices surged to around $80 a barrel as tensions escalated, particularly with disruptions in the Strait of Hormuz, a critical choke point for global energy supplies. Analysts are warning that a prolonged conflict could push energy costs even higher, potentially stoking inflation concerns. However, historical data suggests these energy spikes from geopolitical events are often transitory, so for long-term investors, this might not be the time to panic, but rather to assess how it impacts your portfolio's energy exposure in the short term. On the brighter side, let's check out some large-cap gainers that managed to swim against the current. Booking Holdings and Expedia Group saw impressive jumps, likely fueled by a report that OpenAI is scaling back direct booking integrations, easing competitive fears in the travel sector. AppLovin and Intuit also posted solid gains, showing strength in tech despite the broader market pressure. For long-term investors, these pockets of resilience in tech and travel could signal opportunities if the broader market stabilizes. But not everyone escaped the downturn. Among the large-cap losers, companies like Toyota and Philip Morris took notable hits, reflecting broader cyclical and consumer defensive sector weaknesses. Southern Copper and Corning also saw sharp declines, likely tied to commodity price volatility and tech sector concerns. These dips might catch the eye of value hunters among you, but remember to weigh the geopolitical backdrop before jumping in. Short-term pain could linger if oil shocks persist. Looking at the market movers, the usual suspects like Nvidia, Apple, and Microsoft continue to dominate trading activity. Nvidia held steady with a slight uptick, showing its staying power in the AI narrative, while Apple and Alphabet saw minor pullbacks. Amazon and Broadcom, however, posted gains, hinting at selective strength in big tech. For long-term investors, these names remain core holdings, but the volatility reminds us to keep an eye on entry points during pullbacks for potential portfolio boosts. When it comes to the most active stocks by volume, Nvidia again leads the pack, underscoring its central role in the AI and tech conversation. Intel also saw heavy trading with a small gain, while names like SoFi Technologies and The Trade Desk caught attention with significant moves. High volume often signals short-term momentum, but for your long-term strategy, it's about filtering the noise and focusing on fundamentals in these names. Shifting gears to earnings, we've got a packed calendar this week with some heavy hitters reporting. Companies like Costco, Kroger, and Broadcom are in the spotlight, and their results could set the tone for retail and tech sectors. Kroger already reported, beating profit expectations despite a sales miss, showing how margins can still drive value. Marvell Technology is another name to watch, especially for insights into the semiconductor space post-NVIDIA's updates. For long-term investors, these reports offer a glimpse into sector health. Retail resilience or tech innovation can signal where to allocate for the next decade. You can find exclusive earnings transcript summaries on MarketSnap. Peaking at the top performers over the past week among large caps, Garmin led with a massive surge, followed by Lumentum Holdings and AppLovin. Shopify and Occidental Petroleum also made strong moves, reflecting gains in tech and energy amid the oil price spike. These short-term winners highlight where momentum is building, but for long-term strategies, consider if these gains are sustainable or just a reaction to current events. On the flip side, the past week's biggest large-cap losers include Genuine Parts and Rivian Automotive, both down significantly. Blue Owl Capital and Okta also took hits, showing weakness in financials and tech. These declines might tempt bargain hunters, but remember to assess if they're tied to broader market fears or company-specific issues before adding to your long-term holdings. Sector-wise, industrials and consumer cyclicals topped the charts over the past week with solid gains, likely benefiting from rotation out of tech. Energy also saw a bump, no surprise given the oil price surge. For long-term investors, these sector moves can guide diversification. Industrials might offer stability if tech volatility persists. Meanwhile, healthcare lagged as the worst-performing sector over the week, alongside utilities and financials showing weakness. These underperformers might reflect broader risk-off sentiment, but for long-term portfolios, healthcare often provides defensive qualities worth considering during dips. Wrapping up the broader market outlook, the S&P 500 remains under pressure as geopolitical risks overshadow earlier AI-driven enthusiasm. Analysts note that while U.S. equities have shown resilience compared to Asian markets, volatility is likely to persist with oil shocks and upcoming economic data like the February jobs report. For long-term investors, this is a classic stay-the-course moment. Focus on quality holdings and use volatility to average down if your conviction remains strong. And on the tech-heavy NASDAQ front, despite today's slight dip, there's still underlying strength in select names. The narrative around AI and semiconductors continues to drive interest, though regulatory concerns around AI chip exports are creating short-term headwinds. Long-term, tech remains a growth engine, so keep an eye on how these regulatory ripples play out. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep-dive SWOT analyses to keep your investment game sharp. Hit that like button, subscribe, and we'll see you tomorrow for more insights to build your wealth over the long haul. Stay savvy, investors.